Welcome back to Golden Rule Radio. We've got Tori and Miles and myself, Rob, here in the studio. Miles, let's talk about charts. Take us to Chartland, buddy.
I've been to Chartland once or twice. It's a depressing place where you make a lot of predictions and hopefully one more goes true than doesn't. Sometimes that's the case.
You said that gold was probably going to retest the 382, and here we are at the 382 and 50-day moving average. Show us what it looks like.
Yeah, taking a look at gold, and gold's been in this massive trading range for years. And since we're a weekly show, we're going to look at some shorter term charts here today because we are seeing some action in the shorter term charts. Gold, after taking its big jump up here, at the beginning of December, all the way up to 2149, it was pretty expected to see gold come back down. We're looking over 17% in about 2 months. Completely reasonable to expect to see gold come down after going from around 1820 up to 2150. So here we are at the 382 fib, scraping just below that is your 50-day moving average. So it's nice to see a couple indicators start to touch here. Gold still hasn't done anything that really signifies reversal, really signifies any type of turn back down, even though we have come off of new all-time highs. And it wouldn't be unreasonable to think, just from a trading perspective, you see a price like we saw in gold last month, yeah, why wouldn't it lose $100, $200? But coming back down to the 382 fib, let's be honest, it's a pretty safe magic 8-ball guess for me. The 382 is about as shallow as you'd expect to see on a retracement, and potentially seeing a little bit more from here. So you're correct. Yeah, good to see us sitting there, and we're probably going to close there here today on Wednesday.
Subjectively, it feels like it, doesn't it? Gold is surprisingly strong with some of the other things going on. I mean, if you compare it to its primary competitors, the U.S. dollar, not enough move to warrant gold dropping. Or bond yields, the 10-year still under 4% at 3.99. So it's not like other fundamentals are driving things in a way that we would think the price would be coming down. But still, I'm really encouraged that it's hanging in there.
I'm very happy. I feel very confident in the long-term projection. Long-term being 3 months. I think gold looks really solid right now. I think it's a good value.
Well, unlike Miles, I use charts for retrospection. I can't predict anything. It's like prophecy. It's for recognition, right, in this guy's mind. And that being said, it's kind of like, okay, yeah, I kind of feel like we could come down. I operate on feelings. I feel like gold's going to come down to that 50% retracement level. So that's just the sense I get. And I'm going to be completely wrong again, and that's fine.
I don't expect it to back up too much. Okay, maybe we'll get to the 200-day moving average, which is in the 1960s, right there next to the 200-day moving average, which I think is in the 1980s. Am I right about that?
Yeah, and
Miles?
that's that 50% retracement. That's kind of what I feel, to use that term again.
I would say that that's always a possibility, but with everything going on around the world and with just the enormous explosion of financial assets worldwide and the outrageous level of debt that every country is carrying, I just don't see gold at any real risk right now. Okay, so we might see a 2 or 3% drop from here.
I totally agree.
Big deal.
That's all I'm saying. I'm not bearish, right? And I'm not trying to say Miles' charts are wrong. I'm saying if we do see those support levels or a progression downward to something, that would make sense as a short-term blip. I think this is going to be an excellent first half of the year for gold. Yeah. And I just feel like sometimes there's a dip before a climb. From which point do we bounce? And that I don't know. And silver's even less predictable to me. I mean, Miles, we're going to throw you under the bus today. I mean, you've got one that's not necessarily as flat here in the shorter term chart as gold is.
Yeah, what is silver, 22 something?
Yeah, we got to pause here real quick, Tori. Not the recording, just the conversation. We can't switch over to silver quite yet, because you just said
that's a drive-by.
You just said Miles's charts can't be wrong. Of course they can't be wrong. They're just data. Only Miles can be wrong. The charts are never wrong. Only me. Finishing up gold. There's one last thing I want to point out, though. I actually like your 50% number too. One of the reasons I like the 50% retracement, it'll line up pretty nicely with the previous low, which happened back in around the middle of December, down around 1980. I think we got to like 1975. Also, by the time we get down there, it's probably going to have drawn that 200-day moving average up, which is sitting in the 1960s. You know, you give us another couple weeks, and that's going to pull that average up as dates drop off that 200-day counting time frame. So I wouldn't be surprised on the flip side, because charts are never wrong, but Miles is. Rob, you also might be right. We've yet to see anything that suggests actual pullback here. And eventually that's going to happen. Like this always happens when you get to a top end in any trading range. And the trading range in gold has been between like 1,700 and 2,100. You know, eventually we're going to bump against that 2,100 enough times to where it's going to break through. And this could be the time, it could be the next time. It doesn't really matter in the long run, because some of the fundamental things you guys brought up a second ago. And we're going to talk about that here in a second, because we've got some interest rate things to discuss. But we'll move over to silver first, like you're suggesting. Silver, to me, I don't know if I'd quite agree, you know, that gold has been more flat than silver. I think there would actually be an argument that silver has been considerably more flat than gold. It's just been more volatile. The percentages have been higher.
Certainly for 2023. All of last year, it started and finished at the same point. Yeah, I'm thinking more like December 1 through now, although it did rally into the end of the year. So, yep, correct me where I'm wrong. Keep going.
Yeah, because you're looking at, you know, a pretty dramatic swing in 2020. I mean, you're talking silver going from 11 to 30 in, 3 months between March and June. And really since then, after poking around trying to push above 30 here for about a year, by the time we got into May of 2021, we had a long run down. We've had another long run up, and then, like you said, it's just been sitting completely flat really since about May of 2023. So silver really hasn't done much of anything. It's been sitting really in between about 20 and 26 since beginning of 2022. It's been a year and a half. Now, it feels volatile, because a $4 move on a $20 price tag, that's 20%. You know, to have a swing up and down in a trading range of 20% for a year and a half is pretty significant, and it feels painful when it happens.
Yeah, we mentioned that last week. What was a 24% swing, really, from peak to trough in 2023 alone, only to end flat. So where are the moving averages in silver? Like, where should people be looking into, you know, to challenge you the same way with support levels and or to the upside resistance? Are we still trying to hit our head at 26 if we get a little rally here? But where's the floor?
Again, it's kind of hard, because you can look at the entire move since 2020, and we've really been playing between the 382 and the 618 for the bulk of that time for the last 3 years. So it's been in that trading range. If you want to talk really short term and just zoom into, let's say, I don't know, this most recent move up that started back in October.
Yep.
So if you're talking just in the short term, going back to the beginning of the move that happened in October until recent. Fourth quarter move. Well, now you're talking from around 21 up to around 26 or just under. So we're actually at the 618 fib now. We came down to it immediately. We had a pretty steep correction back down from 26 down to under 23. A little bit of a bounce here through December, and we're right back down to it now. So if you want to see silver start climbing again, it really can't go much lower than we're at right now.
Okay.
It's going to have to stay above like 22.50. We might have 40, 50 cents of wiggle room to the downside. So other than that, I think you really want to see silver start climbing at this point. If we see us below 22.50, you could be talking $20 silver again.
18.
Yeah, I love being below 23. The only reason I'm asking these questions, and I know Rob is too, is that these are entry point opportunities.
Yep.
If somebody's looking to pinch 1 or 2% in an IRA or what have you, then so be it. I mean, it's still part of your investment portfolio. We look at this as just a portion. And so, especially in an IRA, all IRAs should have a growth mandate to them.
Oh, yeah.
In most instances, unless you're just retired and you're drawn down on it. But even then, I mean, we still approach them with a growth mandate with compounding out strategies and what have you. But to review briefly our approach, we do what's called the investment triangle approach with our clients when we're on the phone talking about total portfolio, because last year's a great example. And what, Miles, you're talking about, yeah, gold and silver had a good fourth quarter to end. And gold, honestly, was one of the best performing assets in 2023. But it did compare to the DJIA, the Dow Jones Industrial Average, and the S&P didn't compare to the NASDAQ. And that's why you don't ever have to leave that category altogether. If you're diversified per our investment triangle, gold and silver can be a key cornerstone piece of it. But the dollar was down, equities were up, gold was up, silver was flat. Diversification is very, very key. That's why we're looking at this is, like, where do we add to ounces here in or out of an IRA? Doesn't matter. Let's transition over to the white metals, because again, subjectively, I feel really good about silver. Like, if we were going to be having a strong correction, this would have been the week. This would have been the time with nothing really happening, and it's not happening. Just gold and silver, yeah, we're under 23. Again, opportunity. Platinum and palladium have been more volatile, especially palladium continues its decline like we talked about last week. And man, they just about got to parity. We're about 8% separation between the two. And I'm just waiting and waiting. So Miles is going to tell us when that's going to happen.
Sure, because Miles always gives you the when, right?
Yeah, right.
Yeah, ask any of my clients. Yeah, I hate the when question. I don't know. If I knew that, I'd be a billionaire.
That's right.
Platinum, I would argue, has a pretty firm line in the sand around like 775. I'm well aware that if you go back to March of 2020, we did dip below it a little bit. But realistically, if you look at a long-term chart of platinum, 775, 750, anything just below 800. That's really where platinum took off from, starting all the way back in 2004 in the 2008 market crash. That's what it came down to before it climbed back up. We've hit it here a couple times in 2018. We've used it as a bottom or just under 800 here in 2022. So I would argue we're pretty tight to the floor on platinum. I can't imagine it goes much lower. And anytime we get close to that number, it might be worth picking up a few ounces. It also doesn't hurt that we're seeing, as you just mentioned with palladium, that ratio is starting to look a lot more favorable for those of us that were buying platinum back in like 2015, 2016, 2018, when palladium was out of its mind. And it's nice to see that palladium's gotten a little bit of its sanity back. I don't think it's ratio trade time personally. Maybe I can be talked out of that, but I'm not quite there yet to where I'm willing to give up my platinum quite yet for palladium. But boy, it looks a lot better than it did a couple years ago. And that's not because platinum went up, like you just said, because palladium's getting kicked in the shins. Well, Tori, you mentioned the value of a balanced portfolio a second ago. And when we're looking at things like the equities market, which I think we would all argue a lot of the growth we've seen in the equities market, A, is a rebound off the massive decline that we had. And B, is a hope and fingers crossed that the news coming out regarding potentially stalling, if not even lowering interest rates for the foreseeable future is certainly seeing some reaction here. Now, what I also find interesting are the massive number of pressures that the US dollar is now going to be facing globally, not just here domestically, because we can expect with lowered interest rates, there's going to be increased borrowing, increased inflation, but also internationally as well.
Yeah, and if you look again at that investment triangle, when the US dollar is strong and your dollar-denominated savings are doing well, you'll be weak in another area. And I think that we'll see that coincide with an equities market drop. And again, I'm not going to have any sort of conjecture as to timing, but the Fed has caused a problem here, right? They've created a market rally from the microphone talking about what they might do. And unfortunately, the market overreacted. It priced in 6 rate cuts compared to the 3 that the Fed said was potentially going to be the case in 2024. But you're already kind of having some backpedaling. Fed Governor Bowman, after the market closed yesterday, said that his view has evolved to consider the possibility that the rate of inflation might keep going. There's the risk that the recent easing in financial conditions encourages a reacceleration of growth, which means obviously a cause of inflation to reaccelerate. So he says he's remaining willing to raise the federal funds rate further at a future meeting. Well, that's completely different than what Powell said at the end of the year that caused the market rally. So there could be a bloodbath in equities in a short period of time if the Fed backpedals on that officially. But 2024 holds so much uncertainty that's another real reason I feel great about gold. Maybe a short-term blip on the radar is a drop, but the bigger picture is, look at geopolitically. We've got 5 conflicts that I can just count off the top of my head that we're involved in right now that are potential hotbeds for us getting deeper involved in, between Russia and Israel and China, Iran, Iraq, Lebanon, the Saudi and Houthi rebels. Those are all things that we're fighting behind the scenes. And so to me, with an election year and the Fed not really knowing what it's going to be doing, the economic numbers not looking good, we're still on the verge of a recession. To me, everything's kind of baked in there for gold to have a really strong first quarter, and we'll see how the year shapes up.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you'd like to walk through your personal portfolio through the lens of our perspective triangle, click the link in the description, set up a time to chat with Tori, Rob, myself, or any of the advisors here at McIlvaney Precious Metals. As always, you can find us on our website at McIlvaney.com. We're on Twitter at ICA Gold and Facebook at McIlvaney Financial. Our phone number is 800-525-9556. Thanks again for listening and have a great week.